Good morning or good afternoon, depending on where you are, and welcome to the Myeloma Financial Coach chapter. My name is Audrey Burton-Bethke, and I'm the Myeloma Crowd Community Manager. This event is brought to you by the Myeloma Crowd Community Program by HealthTree. I am excited to join you again, and I do apologize. This was originally scheduled for last week, and we had an internet outage here at the office. I appreciate your patience with us, and they have worked diligently on the internet for the past week. I had an event last night that went smoothly, and just hoping that we can repeat that same effectiveness again today. And again, thank you for your patience last week. We will start with a couple of announcements. Again, welcome. We're having Diahanna Vallentine speak to us today. She is the Myeloma Financial Coach for HealthTree, for the HealthTree Foundation. We're grateful to have her here. And for those of you who don't know her, I will introduce her in just a moment. I'd like to thank our sponsors. We have Bristol Myers Squibb, Amgen Oncology, Genentech, Karyopharm Therapeutics, Adaptive Biotechnologies, Sanofi, Oncopeptides, and Takeda Oncology. Without them, this event would not be possible, so we are grateful to them. And it is my pleasure to introduce Diahanna to you, for those of you who, again, aren't familiar with her, although last week you might have gotten to know her. Diahanna is a myeloma coach who specializes in financial help for myeloma patients and caregivers. As a professional financial consultant, and former caregiver of her husband who was diagnosed with multiple myeloma, Diahanna perfectly understands the financial issues facing myeloma patients. And I've watched her work, and she does an amazing job. And today we are going to be talking about Social Security, flexibility, and choices for your retirement income. So I'll turn the time over to Diahanna. You kind of explained a little bit last week, but let's hear again for those of you who maybe couldn't join last week or need a refresher. Diahanna, why did you choose this topic, and what can they expect for today?
Hello, thank you. And again, thank everybody for joining us again today. I am going to try to go over, it's a very complex topic, Social Security. Um, Social Security benefits, and I'm going to tie in Social Security disability as well because it's very important for timing and how people get their income. A lot of people are having to go on Social Security disability, especially if you have an illness.
Mhm.
And we're trying to make sure people are aware of the options that are available to them so that they can take advantage of everything that Social Security offers. Because it's complex and it can be very personal to everyone, I will be glad to take questions at the end. But bear in mind, I might not be as specific as you'd like for me to be. In that case, please reach out and I'll be glad to answer your question.
Can you bring the microphone a little bit closer? I am
Sure. Is
having
this
trouble.
better?
A lot better.
Good.
Yeah, awesome.
So if it becomes if your question is very specific, we may have to take it offline. And feel free to reach out to me. My number will be here, so you can reach out to me as well. So without further ado, let's get into this. You ready for the first slide? Okay, and again, because Social Security is very complex, these are some of the things I'd like to cover today. It's like understanding the basics of Social Security, how to qualify for the benefits, maximizing your Social Security benefits, working while taking Social Security benefits and how that can affect your taxes and income. How is Social Security taxed? Taking benefits early, Social Security disability insurance, SSDI, and retirement. How long can you wait until taking benefits? Survivor benefits in Social Security disability income and retirement Social Security income, benefits to surviving spouses, ex-spouses, and children, and when to start taking Social Security, and how long will Social Security be around? That is the big question. We'll finish up with that one. Okay, understanding the basis of Social Security. What is Social Security? So Social Security is a federal program that works by using taxes paid by both the employer and the employee into a trust fund that provides eligible individuals with benefits. Some people assume that what they're paying into Social Security, that's what they're going to get, and that is not the case. Everybody out there working is actually putting into the trust fund, and then the trust fund hopefully is earning interest and doing what it's supposed to so they can pay off those beneficiaries when you become retirement age. So who receives benefits? Individuals who are at least 62, that would be early retirement, and who have worked at least 10 combined years at jobs for which they paid into Social Security taxes. A spouse at age 60 may also collect survivor benefits, or a spouse at age 50 may also collect survivor benefits if disabled at the time of the spouse's death or within 7 years of the spouse's death. In some cases, spouses, widows, and divorcees are eligible for Social Security requirement benefits based on the spouse's or ex-spouse's earnings history. Unmarried children 18 years or younger, or 19 and under if a student, can also get survivor's benefits. You must be a United States citizen or a lawful alien to collect these benefits. Next slide. So how do you qualify for benefits? You must have you must have enough work credits to qualify for Social Security. So credits are based on the total wages and self-employment income for the year. Now keep in mind that the amount of earnings it takes to earn a credit may change every year. In 2021, you earn one Social Security or Medicare credit for every $1,470 in covered earnings each year. You must earn $5,880 to get the maximum 4 credits for the year. If you were born after 1928, which a lot of us are, you need 40 credits to qualify for Social Security retirement benefits. You may receive benefits as a spouse or a dependent under certain circumstances. So benefits can be paid to workers' children and surviving spouses who are caring for the children, even if the worker doesn't have the required number of credits, that 20 credits that I mentioned earlier. They can get benefits if the worker has credit for 1.5 years of work. That would be 6 credits total in the 3 years just before their death. Each person's situation is different. And so I would suggest you speak to Social Security Administration and person or representative about your choices if you need to look at those things. Next slide. So I included Social Security disability income because some of you may already be on Social Security disability and you may be transitioning over Social Security income soon. So I need you to understand this because timing is always very, very important when you're looking at Social Security disability, and how it ties in with Medicare and the whole thing. So let's go into this. So to be eligible for disability benefits, you must meet a recent work test and a duration work test. The number of credits necessary to meet the recent work test depends on your age, although it's different from qualifying for Social Security income. If you are younger than 24, you may qualify if you have 6 credits earned in a 3-year period ending when your disability starts. If you're between the ages of 24 and 31, in general, you may qualify if you have credit for working half the time between age 21 and the time you become disabled. For example, if you become disabled at the age of 27, you would need 3 years of work or 12 credits out of the past 6 years between the ages of 21 and 27. So if you're age 31 and older, in general, you must have at least 20 credits in the 10-year period immediately before you become disabled. So how does Social Security disability payments how are those amounts determined? So your primary insurance amount, or the PIA, the next slide, please. Oh, we'll just stay here. Um, your PIA, or the primary insurance amount, is the amount you receive if you were to qualify for disability benefits. It's not as simple as the Social Security benefits. However, while you're technically eligible to take Social Security benefits at age 62, you won't receive the primary insurance amount until your full retirement age, which could be between 65 and 67. 66 or 67. At 62, your benefit amount would only be 70% of your primary insurance amount, increasing gradually until you reach your full retirement age. This means that between 62 and your full retirement age, your disability benefit would be higher. So you can actually get more Social Security disability income than if you were on Social Security. And there's an additional benefit to taking disability versus Social Security early, because you're allowing your Social Security benefit to continue growing, which can continue growing until age 70. So this disparity is even greater if you happen to become disabled after you turn, let's say, 63. The reason is that your Social Security benefits will be determined by your primary insurance amount for the year you turn 62, while your disability benefits would be calculated with your primary insurance amount for the next year, provided your average indexed monthly earnings is the same or higher than your primary insurance amount for the later year will be higher. So when does Social Security pay more than disability? So the reverse is actually going to be true with Social Security. If you are between the full retirement age and 70, after you reach your full retirement age, your Social Security benefit amount increases by 8% for every month you hold off your electing to take your Social Security benefit. This continues until you reach age 70, at which point your benefit reaches its maximum amount. At that point, you're no longer going to get accruals on that Social Security benefit. In this situation, your monthly Social Security benefit would be larger than the disability benefit you would have had earlier. So when you're looking at taking Social Security disability or coming off of Social Security disability income, be very mindful of what your actual take home is going to be, because it could be a bit higher when you're taking a Social Security disability versus going on to your Social Security, which continues to get those accruals until age 70. And that increase would be paid out for the rest of your life. So Social Security disability benefits, the next slide. I think we're off a little bit. Well, let's hold for a minute. Social Security and Social Security disability benefits are a form of social protection insurance that pays you income if you become disabled. So how long do you receive disability benefits? You'll receive Social Security benefits as long as you remain sufficiently disabled. This is disability only. This means as long as your disability prevents you from working, you are eligible to continue receiving Social Security disability benefits. The Social Security Administration will conduct periodic reviews of your case to determine whether you're still eligible for disability benefits. And for those of you who are on disability and has been on it for a couple of years, you may have already gone through this actual process. So these reviews are called continuing disability reviews, and they generally happen every few years, usually every 2 years or so. Although the time period in between reviews depends on the severity of your condition and the likelihood that your impairment will improve. There are very few people that I know that have myeloma when they end up going on Social Security disability, where Social Security Administration will say, well, now you're eligible to work again. There are very few people that I know that actually gone through that process. Usually when you have myeloma, you're considered disabled, and that does not change. If there are any changes in your condition that's either better or worse, then it's always to your advantage to contact the Social Security Administration. So there are 3 separate occasions when Social Security disability benefits stop. And these benefits will stop when you are no longer considered disabled, when you reach retirement age, and when you begin to earn too much money. Because you can earn money while you're on Social Security disability, but there is a threshold as to what you can get. Now, taking income. Now, we're going to talk about Social Security here. We're not going to talk about Social Security disability. Now, as I previously mentioned, you can choose to take Social Security early, starting at the age of 62, or you can defer payments until full retirement age, depending on the year you were born. And you can also defer payments until age 70, at which, as I mentioned before, you will increase your benefit beyond full retirement age. However, at age 70, unless you're still working, the retirement benefit increase stops. The only time that retirement benefit increase goes beyond age 70 is if you are earning a higher income, and then later on that will be recalculated into your Social Security benefit income. You can go to www.ss.gov, and that you can do some calculations on how that would work. Now, next slide, please. So how can taking an early benefit affect your income for life? And remember I said at age, you will continue to accrue until age 70, or if you worked beyond age 70, your income will be refigured or recalculated into that calculation. Retirement benefits are designed so that you receive the full benefit if you wait until full retirement age. That depends on the year you were born and how long you reach and how long it is until you reach full retirement age. And some people think that when I reach age 67, let's say that was October 1st, I reach age 67, that I'm on full retirement age at that point. Not necessarily. It's generally some months after that. So it may be age 67 in 3 months, age 67 is 4 months. So you don't want to apply too early because then you are still leaving some benefits on the table. So at full retirement age, you would collect 100% of the monthly Social Security benefits. If, however, you defer retirement benefits until age 70, you can get an additional benefit boost. So what happens to you after your age 70? Nothing. Accruals will end unless you're working. So you're at that point, your Social Security benefit is set. Can you collect Social Security benefits while still working? Next slide. Yes, but your income could reduce the amount of your benefit if it's drawn before full retirement age, depending on the year you were born. Social Security does not consider you to be fully retired if you make more than a certain amount from work. Over that cap, you will lose by way of deduction from your benefit, again, based on your full retirement age, including your birth month and day. Note, if you are self-employed, Social Security counts your net income only. If you receive wages, it is based on gross pay. So, yes, you can work while you receive Social Security retirement or survivor's benefits. When you do, it could mean a higher benefit for you and your family that will pay out the higher benefit for life. Each year, the Social Security Administration reviews the records of all Social Security beneficiaries who have wages reported for the previous year. Now, this is what's paid into the trust fund. If your latest year of earnings is one of your highest years, they'll recalculate your benefit and pay you any increase that you're due. This increase is retroactive to January of the year after you earned the money. So if you receive survivor benefits, the additional earnings could help make your retirement benefit higher than your current survivor benefit. And that's the importance of figuring out whether you can afford to wait or not. So how much can you earn and still get a benefit? So when you begin receiving Social Security retirement benefits, you are considered retired for this as far as the Social Security Administration is concerned. You can get Social Security retirement or survivor's benefits and work at the same time. However, there is a limit to how much you can earn and still receive full benefits. If you're younger than full retirement age and earn more than the yearly earnings limit, your benefit can be reduced. So if you're under full retirement age for the entire year, they will deduct $1 from your benefit payment for every $2 you earn above the annual limit. So for 2021, that limit is $18,960, not very much. So in the year you reach full retirement age, they deduct $1 for every $3 you earn above a different limit. In 2021, this limit on your earnings is $50,520. Social Security Administration only count your earnings up to the month before you reach full retirement age, not your earnings for the entire year. So if your earnings will be over the limit for the year and you will receive benefits for part of the year, they have a special rule, Social Security Administration, that applies to earnings for the year. That special rule will allow the Social Security Administration pay you a full Social Security check for any whole month that they consider you retired, regardless of your yearly earnings. So when you get on the website, Social Security Administration at .gov, I would suggest you look at that. Make sure you're looking at your months, your full retirement age months, and do that calculation before. And I would suggest you start looking at this before you go on Social Security. If you're on Social Security disability, before you go on Social Security, so you can make sure that you're getting the best benefit that you can get. So when you reach full retirement age, beginning with the month you reach full retirement age, your earnings no longer reduce your benefit, no matter how much you earn. So you can earn, let's say your full retirement age was 67 and 4 months. After that period of time, you can earn $1 million a year. It's not going to affect your Social Security. So next slide. So here's a question. Here's a question I had a couple of people ask over in my entire 20 years of being a financial advisor. A lot of people don't know this is actually a benefit or options available to them. Can you stop your Social Security payments and restart at a higher rate? Yes, with some time limits, and Social Security will treat it as if you never started in the first place. So you can do that within 12 months of starting your Social Security. There's a number of times you can request a withdrawal, one time only, and you will need to repay every dollar you may have received, including your retirement benefits and any benefits paid to spouses or children. And they must consent, those spouses and children must consent in writing that they approve of the withdrawal. Good luck on that. You must also repay any money withheld to pay Medicare premiums. So if those Medicare premiums were paid out of Social Security, Medicare Part A, whatever, then you're going to have to pay all of that back. And then you're going to pay the premiums for those, the Medicare premiums and everything yourself. So why would you want to request a withdrawal of those benefits? Let's say, for instance, you went back to work and you had a really, really good job paying a lot more, and you're not going to need the Social Security benefits, or that Social Security benefits would be greatly taxed or reduced. That might be a time to consider it. But remember, there's a time frame that you can do that. It's only within 1 year of applying for those that withdrawal. Next slide. So let's say you've been getting Social Security for more than 1 year. At that point, you can no longer have the option to withdraw their benefits. You're stuck, right? Not necessarily. Once you've reached full retirement age, whatever that age may be, you can request to have a suspension of your benefits. That means they will suspend the benefits for that period of time. During that suspension period, you will continue to accrue delayed credits until you restart your payment program up to age 70. You can either request this, or the Social Security Administration will automatically start your benefits again to you at the age of 70. So there's an option. If you started your Social Security benefits and you were able to go back to work and you're earning enough income, you didn't want your Social Security, you could request they suspend that. In doing so, you continue to get those accruals on your Social Security benefit that will be calculated in, as well as the income that you're getting, so that you'll accrue benefits and you'll have a higher payout for the rest of your life. Now, important one. Next slide. How Social Security benefits are taxed. So at age 65 to 67, and some of you may have already found yourself in this situation where you're working and you found your Social Security taxed because you earned too much. It's frustrating, but that's how it works. At age 65 to 67, depending on your birth year and when you reach full retirement age, you can get your full Social Security retirement benefits tax-free. However, if you're still working, part of your benefits may be taxed. If your spouse is working, this will also apply depending on their earnings as well. Taxation of Social Security begins with your adjusted gross income from Social Security, and then includes self-employment earnings, interest, dividends, required minimum distributions that you take on qualified plans like your 401ks, IRAs, and other taxable income. If you're getting income from CDs, bonds, all of that is included in your income. Then any tax-exempt interest is added to the calculation. So you think you don't have to pay taxes on some of those tax-free bonds, whether they're municipal bonds or whatever they are, it's also included in your adjusted gross income. So if you're filing as an individual and your income is $25,000 a year, benefits are taxed at 50%. And up to 85% of benefits, if taxed, of your benefits are taxed if your total income is $34,000 a year. So that greatly reduces your Social Security benefit. Next slide. So if you're filing jointly, even if you don't work and your spouse does, that can also affect your benefits. Up to 85% of your benefits can be taxed by a couple filing jointly with a combined gross income of $44,000. So if you are working and only slightly over the allowable amount, consider a Roth IRA. Deposit some money into a Roth IRA. At age, I think it was 55 and over, you can do $6,000 to $7,000 into a Roth IRA, still an IRA, no matter what IRA it is. The Roth IRA the money goes in after tax, which means the money's already been taxed, and it can grow tax-free as long as and you can take withdrawals out tax-free as long as you're age 59 and a half. So that might be a great thing to consider. And there's no time limits as to when you can put in to a Roth IRA as long as it's earned income. So, or you can buy an annuity contract. They're a lot more complex than some investments. And I would suggest when you look at these options to talk to a financial advisor because they can give you the information and look at your particular situation and find out what's best for you. Or you can withdraw taxable income in the years before receiving Social Security benefit. For instance, let's say you retired at full retirement age, say 67 and 4 months. And you don't want to start taking Social Security. Well, don't do that. Of course, you don't have to do that until age 70. What you can do is start taking income for your retirement off of your accounts that are taxable, such as your 401ks, your IRAs, and things like that. And try to spend those down before you go into your Social Security so you won't end up reducing the amount of your Social Security benefits. So Social Security, disability, and spousal benefit taxation work very, very much the same, as well as survivor benefits paid to children. Although children rarely make enough money to be taxed on their income, although some do, Social Security is not taxed in those situations. So if you have any questions regarding this, it could be very, like I said, it could be very complex. It could be very specific to your situation. Please reach out to me and we can go through this for you. Again, some more information about how Social Security is taxed. So we've been referring to federal taxes, not state taxes. There are 13 states that tax Social Security benefits. Those are Minnesota, North Dakota, Vermont, and West Virginia. They follow the taxation under federal rules. Colorado, Connecticut, Kansas, Missouri, Montana, Nebraska, New Mexico, Rhode Island, and Utah are partially taxed due to exemptions for income and age. So the IRS has a worksheet to help you determine your taxable benefits, and you can go to an interactive tax assistant at www.ssa.gov, and they will give you there's so much information on that website. I encourage everyone to go look at it. So there's 3 ways to avoid taxation on your Social Security benefits. Next slide. There's 3 ways to avoid taxation, and I'm gonna get to that before I get to this slide. And the simplest way is to not earn enough income for your Social Security to be taxed. The other is keep your retirement in a Roth account, like I mentioned before. You can also do Roth conversions if you have money in a regular traditional retirement plan. You can do a conversion, pay the taxes, and put that into a Roth. Pay the taxes up front. Or you can buy an annuity contract that I mentioned before. Those community contracts are really beneficial and you can put up to $135,000 in a retirement account like this. And the longer you live, the longer your annuity will pay out. It's income for life. It's almost setting up another pension plan for yourself. And you can defer the payment until age 85. Unlike your regular IRA qualified plans, qualified means pre-tax or tax beneficial accounts, 401ks, IRAs, those you will have to take out at age 70 and a half, which can boost your income as well. So if you're taking this Social Security disability income, can your spouse get benefits? Absolutely. Your spouse can get benefits if you have been married for at least 1 continuous year and they are at least 62 years old, or caring for a child who is younger than 16 and are disabled. So your spouse cannot be taking their own retirement benefit or disability benefits that would exceed the spousal benefit, and they cannot receive 2 benefits. So if they claim the benefit prior to their full retirement age, the benefit is permanently reduced. So if you do that before your full retirement age, I wouldn't suggest it unless you really need the income. Then your benefit's going to be permanently reduced. You miss all of those accruals leading up to age 70. So changing from survivor benefits to your own Social Security retirement, and not Social Security income, Social Security benefit or your retirement income. So this might make sense if you make more income in your working life than your spouse, but you might want to wait. So you can maximize your benefit. We're on, okay. You can maximize your benefit by continuing to accrue survivor benefits and putting off claiming benefits on your own work record. So this is because you can accrue delayed retirement credits that will increase your eventual monthly payment up to age 70. If, on the other hand, your spouse earned more in their working life than you, it won't make much difference when you switch to your own retirement benefits. Social Security will pay you the higher of the amount. So it's either your benefit from your working years or it's going to be your spouse's benefit. So options if you're eligible for both survivor and retirement benefits. Social Security does allow you to claim both. However, they're not going to give you both of those benefits. They're going to give you the larger of the two, always the larger of the two, and they will not add the two together. You also have the option to take one benefit first and claim the other at a later date. For both retirement and survivor benefits, the payment amount increases if you wait past the minimum age to apply. Consider your immediate needs before making the decision. If you have bigger needs now, then taking the largest amount might be in your best interest. If you're able, claim the smallest amount now and wait to get the larger amount later because it will continue to, as it will pay the higher amount for the rest of your life. So if you have the option to choose both, look at your income coming in, look at the options from whether it's going to be your social security, if you start taking from your retirement accounts, consider the taxation on any of your benefits, which one will be paying out best based on what your needs are now and what your needs are going to be in the near future, and make a decision based on those on that information. Next slide. So survivor benefits. These are, I think this is very important when you're talking to people who have chronic illnesses and they have families at home, they have spouses at home, they're going to need to consider taking care of. Retirement benefits increase if you wait till full retirement age to file, but survivor benefits do not. They are based on the Social Security benefits your late spouse was entitled to when he or she died and will not go beyond 100% of that amount. So if you were widowed twice, you may be entitled to the survivor benefits of both, but not at the same time. For widows or widowers, if you remarry prior to the age of 60, you will lose eligibility for survivor benefits. If you remarry after the age of 60 or at the age of 50, if you're disabled, there will be no effect on your survivor benefits based on the work records of both late spouses. You can still only collect one at a time. The Social Security Administration will supply information on which benefit will be the largest. So I would call them, and when you do that, you're going to need some information. You're going to need um, marriage certificates. You're going to need, and if you're married more than once, you're going to need marriage certificates for both deceased spouses. You'll need Social Security information, Social Security numbers for both deceased spouses, your own, divorce certificates, if you have divorce certificates, all these things you're going to need to prove that you are a spouse of a decedent, especially if there's more than one. So who can receive these benefits? Certain family members may be eligible to receive monthly benefits, including a widow or widower age 60 or older, or like I said, again, age 50 or older, if disabled, a surviving divorced spouse under certain circumstances, depending on, make sure you haven't remarried before age 60, a widow or widower at any age who is caring for the deceased child who is under age 16 or disabled and receiving child benefits. A unmarried child of the deceased who is younger than age 18 or up to age 19 if he or she is a full-time student in an elementary or secondary school, or a child age 18 or older with a disability that began before the age of 22. Those are the areas or the people who can receive those survivor benefits. So our other family members eligible, it's really interesting. I didn't know this until probably 8 years ago, that under certain circumstances, a stepchild, grandchild, step grandchild, or an adopted child, as well as parents aged 62 or older who are dependent on the deceased for at least half their support, are also eligible members to receive some of that benefit. So if you have to file for these benefits, make sure that you're covering all of these people. These people are aware that they have benefits that may be eligible for them. So if you're a widow or widower and of a person who worked long enough under Social Security, you can receive full benefits at full retirement age for survivors, or reduced benefits as early as age 60. Now, the next one. So when should you start collecting Social Security? Again, this is very personal based on your needs now and what you think your needs are going to be later. If you have um, dependents, spouse, children that you're going to need to take care of. So what is your current health? How long do you plan to be employed? When do you plan to or need to terminate your job? And what are your immediate income needs? Regardless of when you claim Social Security benefits, the sign up for Medicare is still age 65. So you're going to need to be aware of the cost for everything else, associated healthcare costs as well if you leave your work. Except under very few circumstances, you may incur hefty lifelong fees if you wait to sign up. So if you forget to sign up for Medicare Part A or B, you are penalized if you didn't sign up for those when you need to sign up for, regardless of whether you have Social Security disability benefits or not. Next slide. So here's the big question. How long will Social Security be around? So last year, the Social Security Administration came out with an accounting that said that they are fully funded until 2035, and it pushed it back another year. But fully funded means that they'll be able to pay out, based on their estimates, beneficiaries that are in the system. Those numbers can change drastically. We have a pandemic that's going on. We have people who are not working or are working for various reasons. And so anything can make those numbers change. But that doesn't mean the Social Security benefits will go around completely. It means that it may be reduced 77%. They'll have 77% that they can pay out. And we've heard over the years how they may increase retirement age, or they may reduce Social Security benefits. That is something definitely that may probably happen. I'll be willing to bet that's probably what's going to happen. They will extend the Social Security benefits full retirement age out, and maybe reduce or increase that early retirement age from 62, maybe higher. And it would make sense because average people are living longer. So if they're living longer, they're probably working longer. They may be healthier. So that is not a far-fetched conclusion to come to. So it's just something we'll have to look at and keep up with. And I would suggest if you're still working, save, because it's better to be prepared than not. Next page. So some considerations. Again, this is a very, very complex subject. I just went over some generalities. If you have any really serious, very, very personal questions that you don't want to discuss by asking a question now, please reach out to me. I'll be glad to spend time with you to talk about them. So I recommend if you have questions about current or future payments or options, consider calling the Social Security Administration. They were not taking in-person meetings because of COVID. They started slightly pulling those things back in, but now that we have the Delta variant going out, they may not be doing that again. So I would call, they can help you with that. And there may be very long wait times. Just take that into consideration. If you need to make changes and you meet the requirements, don't hesitate to contact them. And especially if there's deadlines, if you want to do a withdrawal or suspension of your benefits, remember there's that 12-month period of time that you have that you can take advantage of that. Make sure you're prepared with all the required documentation, such as marriage certificates, death certificates, divorce decrees, IRS tax forms, Social Security cards, and etc. So be sure to check if in-person appointments are being held, as COVID prohibited this, and appointments were held over the phone only. Just like everything else going on. Everything is so up in the air. So keep an eye on those things. And it's always recommended you call as early in the morning as possible. By afternoon, they're going to be crowded. Get online. There's a wealth of information online for everyone. I would suggest you go online to get do a lot of the basic calculations. and get as much information as you can there. So I am ready for question and answer.
That was awesome, Diana. Thank you. And I will prompt you to turn on your camera so that we can see you again. Um, I think I learned that you can't take both at the same time, I think, or that they don't combine them if you qualify for survivorship and your own retirement income. So that's interesting. And I think that's important for us to recognize and realize. Um, you should have seen the little thing pop up that says start your video. Do you see that,
No,
Diana?
I don't see that. Yes, now I see it.
Okay. That's all good. Um, so we'd love to hear your questions. There's a question and answer box at the bottom of the screen. If you would like to enter your questions, we have a couple comments from Nancy that I'm going to read and then hear your take on that. She says, I heard that if you know you have a limited lifespan, you are further ahead to take a Social Security early. It takes quite a few years for the Social Security increase at 70 to make up for what you lose by not taking it at 62. What are your thoughts on this?
That's so true. And it's very, it again, it's based on, like I said, what your health, when the last slide is talking about your health and your income needs. If you know that you have an illness, um, and your lifespan may be short, then yes, it might be to your, it's maybe to your advantage to go and take your Social Security early,
Great,
especially
thank
if you
you.
have a lot of expenses. You're going to need something to cover those things.
Right, right. Then I have a question. You mentioned a couple times that you might need to wait a couple months after your birthday in order to get the full maximum benefits. How would one know how many months they need to wait?
Okay, if you go on a Social Security Administration, and by that, those months, I'm talking about your full retirement age. Your full retirement age doesn't start like if you turn age 67 on October 1st. That doesn't mean that's your full retirement age. Your full retirement age may be 67 and a few months. If you get on a Social Security Administration website, they'll have exactly what those months are for you to start getting. That's your full retirement Social Security. That does not mean it's not going to continue to accrue, because you will continue to accrue benefits up to age 70 if you don't take it, if you don't take your benefit at your full retirement age.
And is it different for someone, like, is it different based on individuals or is it just simply like 4 months after your birthday?
No, it's based on what your birth date was,
Okay, awesome.
the year you were born.
Um, All right. There's another comment here. Her husband has been on Social Security disability for about 15 years. And she had thought once on Social Security disability, always on Social Security disability. I'm not aware of any other change of status or recalculation of benefit when he turned 70.
It's really interesting. So he's on Social Security disability. If he's 70, well, if he's on Social Security disability at age 70, he's automatically going to convert to Social Security. Now, Social Security disability, because of the way they calculate it, their calculations, it's generally higher for most people. Your Social Security disability benefits generally higher. Now, if he's been on it 15 years, that's quite a long time to be on Social Security disability. He actually got on that somewhat early, at an early age. Um, so when he does convert over to Social Security, to regular Social Security retirement income, generally it falls a little bit just because of the way they look at their calculations.
Okay. Um, you talked about that certain states also tax those Social Security benefits. Talk to me a little bit more about that. For example, I live in Utah, so people here that are being partially taxed. What does that mean, and
That means,
what does that look like?
have you ever heard of homestead? I know some states are called the homestead tax based on age and income. Um, you'll be partially taxed, not your entire benefit for your state taxes. Now, your federal tax is going to be taxed just like everybody else,
Hmm.
but your state taxes may be a little bit different. You can get on this www.ssa.gov and look at your state and determine what those state regulations are. Some of those things may change as well.
Okay.
There may be
So
more states adding to that or reducing that depending on legislation, administrations, whatever administration's
right,
in
yeah.
office.
So it's an additional tax in the state tax to the federal tax,
Yeah, you have just like you pay on your IRS, you have state and federal.
right?
And this you have to pay federal always for your Social Security, and then if depending on what your income is, and on state taxes, it depends on the state.
Okay, interesting. Um, we do have time for more questions. I know because of the weirdness of last week and this week, we have quite a few people watching the recording as well. So I did want to say we're going to be sharing Diana's contact information in the follow-up email. We will also be sharing the website that she's been referencing and the number to call as well for the Social Security. We'll be sharing that in the follow-up email as well so that you have access to that. So if you are watching the recording, you have a question, you're welcome to contact Diana. Her email is myfinancialcoach@healthtree.org. We'll be providing that in the follow-up email. But if you want to contact her directly, because kind of as we were talking about earlier, Diana, this is such a complicated, personalized subject that sometimes it gets hard to try to cram in 1 hour everything that we want to say about it. I think you did a great job at hitting the most important points. Um, let's see if I had any other questions. So just to clear this up, the 401k is taxable, the IRA is taxable, the Roth IRA is not. Is that correct?
Right, 401ks, IRAs, those were taken out pre-tax, which actually benefited you when you're with your employer. Or if you started a retirement plan, you put it in, it comes directly out before taxes. Now, a Roth is generally after tax dollars. That means you've already paid taxes on those dollars. So you put into a Roth. And because of the way the Roth is designed, I'm surprised it's still available this way because you think federal government like as much money as they can. But the Roth you can put in, you could make contributions to that with after tax dollars. It can grow tax free, and you can have access to that Roth tax free as long as you're taking it out. It's been there for 5 years or more, and you're taking it out
Mhm.
after age 59 and a half. So it's a great benefit if you're still working and you're concerned your Social Security is going to be taxed. This is a way you can start putting money away that won't be taxed later on. And when you go to retire anyway, you always want to make sure that you have buckets. You have taxable income. Generally, those are things that are growth positions like stocks for
Mhm.
capital growth. Then you're going to have tax free or things that are tax efficient, which means you may have to pay federal tax, but not state tax. So you have a combination of things working for you. So everything's not going to be taxed. That can be
Yeah.
overwhelming, especially with tax rates changing. And
Yeah.
very rarely, I don't, because of the debt that our country's incurring right now, I doubt if our taxes will be going down. In
Yep.
fact, I suspect because of need, the taxes are going to have to go up. So it's going to
Yeah.
be very prudent for people to start looking at their income and the best way to minimize their taxation so they won't end up with a less benefit that they need.
Yeah. I think it's interesting too. This pandemic, this last year, has taught us that we don't really know what's ahead and to try to be as prepared as possible.
Hmm.
And I think also having a multiple myeloma diagnosis, I mean, none of us expected this. None of us really knew that this was in the cards. And how interesting is it that, now we're thrown into this? Well, we don't,
Hmm.
the future really isn't sure for all of us. And having these kind of discussions, I think is crucial. We've had a couple discussions as well in this chapter about wills, about estate planning. There are things that maybe aren't very comfortable to talk about, or Social Security, it's important, but it might be tedious to try to call the number or try to look on the website. But it's important to have this kind of preparation. It's important to do what we can in order to provide ourselves the best chance of
Hmm.
avoiding financial toxicity and setting ourselves up for success. So
Absolutely.
all right. Well, we didn't get any more questions. I think you explained it really well. And again, I'm sure we'll get more questions as people are watching this recording, which we completely welcome. I'll finish up with a couple outro announcements, but thank you, Diana, so much for
Thank
your
you.
time. All right, so we'll finish. Again, this is Diana's contact information. She is a BCPA, a certified, or what does that stand for? Board
Board certified patient advocate.
Okay. As well as our myeloma financial coach. And her email is myfinancialcoach@healthtree.org here. You can also find her on the myelomacoach.org website. Myeloma Coach is one of the, I think, one of the best programs. Well, I love all of our programs, but this is the most one-on-one program that we have where you can connect with somebody who specializes in something that interests you or shares the same type of role that you have, whether that's a patient or a caregiver. And they're able to talk to you to not only help you through the myeloma journey, but also just forge a friendship there. And again, Diana is on that Myeloma Coach website to be able to schedule an appointment with her to talk one-on-one about financial matters, because as we mentioned, this is so important. Our topic next month is, I had it listed, and Diana, tell me if this is the same, because I know that depending on current events, sometimes these topics change. Is good debt versus bad debt, and what does this really mean? So that's going to be on September 7th at 1 p.m. Eastern. We have other upcoming events. This is an incredibly busy and exciting week in the myeloma crowd community. We have another event tonight at 6:30 Pacific time. That's Southern California Myeloma Community Chapter. We're going to be talking about how to unleash the power of HealthTree Cure Hub in order to accelerate a myeloma cure. Head of product here at HealthTree, Todd Foster, is going to be joining us to talk more about that. Tomorrow, Wednesday, we have two events. At 2 p.m. is our stem cell transplant chapter. It's going to be about the role of vaccines, past, present, and future. Dr. Avagon from Beth Israel Deaconess Medical Center in New York, who is an expert in vaccines, is going to come talk to us about the role of vaccines post-transplant, as well as the future role of vaccines in myeloma immunotherapy. So that's exciting because that's a new and upcoming treatment to add to the myeloma arsenal. Wednesday, August 11th at 7 p.m. Eastern is going to be the launch of our minimal residual disease chapter. We're going to be talking about what you need to know about MRD, the basics, with Dr. Natalie Callender. And then Thursday, August 12th at 7 p.m. is the myeloma caregiver chapter. We're going to be talking about how to best advocate for you and your loved one in healthcare. Author and myeloma patient Rena Weiner is going to be speaking to us about how we can properly advocate for ourselves and our loved ones. She wrote a book called Trust Your Doctor, but Not That Much, and she's going to be talking to us about principles from that book. So to sign up for any of those events or even more events that I haven't mentioned, you can go to www.myelomacrowd.org/events, and we will also include that in our follow-up email. And as always, we'll just finish with thanking our sponsors: Bristol Myers Squibb, Amgen Oncology, Genentech, Adaptive Biotechnologies, Sanofi Oncopeptides, Karyopharm Therapeutics, and Takeda Oncology. And thank you to each of you for helping us grow this myeloma crowd community and sharing this virtual time with us. We'll see you next time. Thank you.